Pull up any crypto chart right now. May 1st, 2026. Bitcoin is sitting at $78,299. 7 months ago, October 2025, this exact coin was trading at $126,199. That's a $48,000 drop per coin in 7 months. And the same institutions that rode this crash down are still paying double the market price to own Bitcoin. Not directly, through a company that hasn't built a single product in 5 years. Welcome to the most expensive financial shortcut in the history of Wall Street. To understand what's happening today, we need to go back to 2020. MicroStrategy was a dying enterprise software company. Revenues were shrinking. Nobody on Wall Street cared. Then CEO Michael Saylor walked into the boardroom with one idea. We're putting our entire cash reserve into Bitcoin. For decades, companies stored their cash in U.S. Treasury bonds. Safe, predictable, boring. Saylor's plan was to throw that same cash into an asset that swings 10% in a single night. Wall Street laughed. Then they watched the stock climb 3,441% in 5 years. Nobody laughed after that. By 2025, MicroStrategy had completely reinvented itself. Ditched the software, ditched the name. Now they just go by strategy. No products, no services, just 600,000 Bitcoin and a stock ticker. Once strategy proved the model worked, every struggling company on the planet took notice. Gaming companies in Hong Kong, buying Bitcoin. Healthcare companies, buying Bitcoin. Budget hotel chains in Japan, buying Bitcoin. The formula became embarrassingly simple. Step 1, announce you're buying Bitcoin. Step 2, watch your stock price jump. Step 3, repeat. Logic officially left the building. Now look at that 3-day chart. All-time high, $126,199 in October 2025. Today, $78,209. That's a 38% crash in under 7 months. The MA99 is sitting at $93,905. Bitcoin is trading $15,000 below its own long-term moving average. Volume is drying up, momentum is fading. Critical support sits at $76,200. If that breaks, analysts are pointing straight to $73,500. Over $110 million in leveraged positions were liquidated in the last 48 hours alone. The chart is telling you the truth. The question is whether Wall Street is listening. Here's the part that should genuinely shock you. Strategy holds a $70 billion Bitcoin treasury. The stock market values that company at $138 billion. Institutions are paying $2 for every $1 of Bitcoin inside Strategy. Why? Because pension funds and major asset managers want Bitcoin exposure, but their investment mandates don't allow it. So instead of updating the rulebook, they pay a 100% convenience fee to get Bitcoin through the back door. And the detail that ties the whole thing together? The Vanguard Group, one of the loudest Bitcoin critics on the planet, is Strategy's single largest shareholder. The people who publicly said they hate crypto are secretly paying double to own it. Here's what most people completely miss. Strategy didn't buy Bitcoin with their own money. They issued convertible debt, borrowed billions, then used every dollar to buy more Bitcoin. When that debt matures, they either repay in cash or convert bonds to stock, flooding the market and destroying the price. Now layer today's reality on top of that. The Fed is holding rates at higher for longer. Oil prices are surging from the Iran conflict. Risk assets are under pressure everywhere. Strategy bought 600,000 Bitcoin at an average of $71,000 per coin. Today's price, $78,279. They're barely above their average buy price, while carrying billions in debt that doesn't pause, doesn't negotiate, and doesn't care what Bitcoin does. No product, no revenue, no backup plan. A leveraged Bitcoin bet in a corporate suit, and institutions are paying double to own a piece of it. So here's where we stand. May 1st, 2026. Bitcoin is down 38% from its all-time high. Strategy is holding 600,000 coins near their average buy price. Support at $76,200 is the only thing standing between here and $73,500. And through all of it, the biggest money managers in the world are still paying a 100% premium for indirect Bitcoin exposure through a company with zero business operations. This has one simple fix. Update the mandates. Allow direct Bitcoin ownership. No premiums, no convertible debt risk, no paying $2 for $1 of Bitcoin. But until that day comes, Wall Street will keep overpaying, Strategy will keep borrowing, and Michael Saylor will keep buying. If this opened your eyes, share it with someone who needs to see it.